All right, guys, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, May 6th, and this is your end of day market recap. So, a couple of themes to kind of go over for the day. Certainly a lot to talk about, but I'll try to make it brief. But a lot to talk about in today's price action, and of course, a whole other slew of earnings reports. Let's start with earnings first, and then we'll talk about today's price action. But last week we had all the heavy hitters report, especially in tech and consumer discretionary. Right, so you had all the FANG stocks report last week, and you can include Apple in that bunch. Whoops, looks like I'm losing internet connection again for the day, which is kind of frustrating, but it is what it is. I think this is still running, so that's fine. May give me a little bit of problems later when I'm rendering the video, but yeah. So basically, this was the second tier tech group. A lot of software names, a lot of names like PayPal, Square reported after the close. I'll go over a little bit of the price action and the after hours. But bottom line, I think a lot of like short covering into these names reporting earnings. Right, that's typically three types of earnings trade that you could basically think about, and I try to think about. Number one is like an actual earnings trade, and we trade those in the room, right? I've been doing a lot of selling premium, so putting a trade on for waiting until basically right before the company reports, and then putting on either in what I normally do is put on a call spread or put on a put spread, either long, or if I'm selling premium, I do something like an iron condor, or I just go outright where, not outright, but I'm selling a call spread, selling a put spread. I never go outright long calls or puts, right, directionally, because the implied volatility is just too high in options, right? If you've been trading options, you should know this principle. No one really, unless they know something, uses options generally in that way, because the option implied volatility is just too high because of the event. But anyway, I'll get off that subject. That's number one. Number two is you can often play a run into the earnings report. So in the days leading up to, you could put on a trade and you could watch basically names that have a high short interest. They go ahead and they're covering. Funds are covering into that event because they don't want exposure. So we see that a lot of times. Again, I do think a lot of that has to do with short interest, but also it's just one of those things that takes place. And then number three, looking for like, if you like a name and you've been waiting for a dip, if the name dips for whatever reason, because maybe it ran up, like for example, PayPal is dipping a little bit, and that's just because I think that the name ran into earnings a little bit too much. I mean, it really ran into earnings. I did some profit taking. I was long PayPal. Look at it; it's actually back up to 125. But again, when a name does this, right? I think it's important to realize the path. Every once in a while, you'll see something really crazy where it will run into earnings and then it will, continue to move. Like Shopify probably classifies as that. Right, we talked about Shopify. I talked about how I didn't think that there was good risk to reward, and what did this name do today? It's up to seven. It's up to 731. So this was one that you could have bought the dip on today because this thing traded all the way down to what, 660. But the initial reaction was very muted in this thing, and then buyers came in throughout the day, had a little bit difficult time trying to get out of value, and then the second attempt, whoop, it really ran pretty nicely. So overall, that tells me that if we go to the major theme, I think momentum names right here are on full tilt. So I've said this yesterday. I talked about comparing and contrasting growth and value. I won't do that again today because I just did it in yesterday's video. But this tells me I think market breadth is really starting to get way tilted, where we're just now there's plenty of names, so don't get me wrong, like there's plenty of names participating, but they're kind of in the same groups, right? There's like 20 different software names that have gone crazy this week. There's biotech has been the story for the last few weeks. It took a breather towards the end of last week, but has been back very strong this week. Solar names have been strong with ENPH. That was your best performing sector for the day. We structured an earning trades for that. Semis, it was nice to see that group. That group finished in the green. So what I've got here on the spreadsheet, of course, is percentage change from the open. It just kind of gives me a feel of what traders what funds were doing for the day. Were they accumulating, or were they taking profits, or were they actually selling a little bit? So you could see the more red that's on the screen that you've got in the sectors tells me that there was either selling, profit taking, or outright shorting, because a lot of names sold off a lot of groups, I should say, sold off from the open. So again, there's some really strong areas out there in the market, and there's some really weak ones too. So I have also written here the have versus the have not trade. This is something I've been talking about for weeks now. I would say is pretty much, I don't have a gauge for this. Maybe I need to work on an exact gauge, like an RSI. I would have to put together a couple baskets, but I think these things are pretty much at extremes. And I think if you look at the price action on the left of your screen, starting with SPY, did finish down on the day, down 65 basis points, and the Qs were green on the day, and also IWM was also. So I think breadth is getting more and more narrow here. I'll see. I'll look at the advanced decline line when it comes out later tonight. It takes a little while for that to come out on Bloomberg. I don't think it's out yet, but I think it's really interesting. So the conclusion of that is something that I've been kind of talking about for the last couple weeks, but I think even more so, I stressed this in the weekend video that I sent out to members. But I think and I'm missing some of the overnight moves, but I think it's really right now like more of a day trader's market. I think it is tough to kind of hold things, even though the overnight market has been crazy, right? There's been a lot of gains that have been made here. But for me, I'm not feeling comfortable seeing this declining breadth right now in the market, as more and more, as fewer, I don't, am I saying this right? Fewer groups. I don't want to say fewer names, because there's a lot of names that are participating. They're just in just a few groups is the problem, right? So there was a great comment I saw on Twitter talking about it's not just the FANG stocks. I agree. It is totally not just the FANG stocks. And if you're only thinking it's the FANG stocks, I think you're being a little bit short-sighted, and you're not looking at some of these names that are participating. But I think we're only looking at a few groups that are doing it. So I do think that is concerning. So make sure that the moral of this, or the conclusion of this, is just make sure that you're taking profits in some places, because I think some things are really getting juiced to the upside. Again, I don't have a crystal ball, but I'm just kind of going with instinct. I don't have any sell signals, right? As on the top of my list in my analysis is to follow trend and to follow price action. But just realize, I think that I never want to see anybody get caught in that situation. And again, everything I'm going over, you could see the risk disclaimers right in front of you, is for information only, not giving out any advice or recommendations. But I think as a trader, one of the things that you always have to try to deal with on a day-to-day basis is greed. And I've been doing very well in this market, knock on wood, and I put out my P&L every month, and so I'm continuing to execute pretty well. But I'm just also getting a little bit worried about what we're seeing in this market breadth. So that said, let's go into some of these charts, and we'll talk about first, before I go and talk about, we'll do this backwards, right? Usually you want to start with the daily chart and then kind of draw in closer, or the weekly chart and draw in closer. But I think this price action should be telling you something. Now today, like yesterday, there was an excuse for this too. At the end of the day, very similar move that took place. This was on a Fed speaker. Today, I think it was on Trump talking about trade stuff again. So I mean, is it that, or is it just that people want to take profits, like me, right? Who are saying, hey, we've had a nice little day here. The S&P is not moving much, but certain sectors are moving really well. So it could just be that people are taking profits other than the headlines. Because I even said here, right, and I'll go over all my trades as usual, but I had said, and I even put on a little bit of, I hedged with some puts. I said, this was at 243. I said, so yesterday we got to move lower, close to around 3 o'clock on basically nothing, right? There was a Fed speaker that, I don't know, didn't even say, I didn't think said anything that bad. But I said, if you were not happy with the outcome, by the close. Be cognizant of how much your risk you're carrying here. And then what did I do was like right after that, kind of made me think too. And I said, even though there hasn't anything that's happened yet, I just went ahead and bought a little bit of. I bought some Qs, not a huge position. I went out to next week. I said hedge trade. I'm okay losing the entire premium, as I'm always when I trade short-term option trades. And I did take this position off at the end of the day. So I'm out of this 423, 336. But again, there's no sell signal or anything like that. It's just I would rather have that exposure if that's the pattern that we're going to see, where there's some type of profit taking or an end of day move, because there wasn't a big MOC imbalance or anything like that. I just think that the powers that be are selling a little bit. So let's go through just a couple different groups that I've been ranting about here. Of course, solar was the group of the day. We talked about ENPH. I'll try to go through some of the names that reported earnings. I think SEDG. These are my two favorite solar names, SEDG and ENPH. This SEDG followed the move, and ENPH was up 16%. So it retraced probably about a good half of that position, back down to 116. But again, talking about running into earnings, I mean, the group, like, why, when something like this happens, and if you're lucky enough to be in it, right, and if it's up, $17, and you're looking for a move further for earnings, you have to kind of really think about that. If that's what your thought is, like you're going to play this after this made a 17% move, like the trade is really be positioned and then take it off before the event. That's how I think professional traders, trade. But yeah, this ENPH was just absolutely on fire. Then of course we'll look at. So this is so I am long this TAN ETF. So this has worked for me. I'm long in the tactical Tribeca Trade Group tactical portfolio. I've been long solar for a while. Just back to the 200-day moving average. FDN. We'll just kind of look at some sector charts. Look at FDN kind of running into this. There's a virgin point of control up here. Looks like it's running into that. And then of course IGV, which is the software ETF. But I think again, if you look at some of these names, like if you break apart this group, names like ServiceNow, Coupa, 52-week highs, Team. So, after this group consolidated, I think at this point, it's kind of the old rinse and repeat. Because these names, from time to time, and again, I'm not making a prediction, but once profit takers come in, this is the first group that also kind of gets hit too. So what I would look for is some profit taking in this group, and then it'll probably set up again. So be mindful of that, after all these things are running. Again, when I see the whole group running, or so many of these names running together, it usually tells me that they're getting pretty much priced to perfection. All right, so I'm coming out and being a little bit more cautious in this group. Again, what I liked today was the semiconductors getting going a little bit today. The CLAC had earnings that were pretty good, but they kind of stalled on the day. So I think that was interesting. There was some Taiwan semi calls that went up. I bought a little bit of those. I started a third of a position. All right, so let's conclude, and then I'll look at just a couple of the bottom feeders, and also like I said, there's so much to talk about today. Let's talk a little bit about bonds. I think this is really interesting here. Now you did get a hammer bar here, somewhat of. I'm sorry, this is not a full hammer bar, I don't think, but interesting, right at the 50-day moving average. So we'll see if buyers come into bonds, but I don't think a lot of traders are thinking that yields go higher. Someone said to me on Twitter, they're like, well, I thought interest rates were fixed. Well, remember, the Fed controls short interest rates. Now, they're doing some quantitative easing with longer term bonds. They've been buying those, every month. But remember, they don't fix the long end of the curve, right? The 10-year, the 20-year, the 30-year, right? Those types of bonds, those move with the market. They're fixing short-term interest rates. I think that always gets lost somehow, but it's pretty. I think most traders know this, but yeah, they're fixing short-term rates. They're not touching long-term rates, except for if they're doing some type of quantitative easing program, which they are. But really, it's the short-term rates. When you hear about them cutting interest rates, that's short-term interest rates. That's Fed funds rate. So anyway, this is what the 10-year looks like. This is the 10-year Treasury index, and you could see it's kind of looking interesting here. So I think this would really confuse the hell out of everybody, which again, I think the market tends to like to do that. Also, look at what's going on with utilities. Utilities are breaking down right at the low of the day. Someone came in. Just shows you. Someone put up like about a $200 million trade, block trade, right, which is what I used to do, right? So when a hedge fund has to unload or buy a big block, they call up their broker and the broker gives them a price, and if they accept it, then they're done. Well, they wanted to sell about $200 million of this XLU ETF, and they quoted them 50 cents down. So number one, that tells you that there's not a liquidity problem, but nobody's wanting to take a lot of risk, because in my day when I used to do this trade, for about $200 million of XLU, I would maybe try to get away with, because utilities are not generally that volatile. I would probably try to get away with 10 to 15 cents away, not 50 cents, a half a dollar. So also, traders are not there. Some of them are working from home, right? So they don't have the coordination of, selling the basket with another trader and so forth, kind of coordinating a big block trade. So, they're probably doing this all in chat. But that's a big you know, trade to do 50 cents down. Now, granted, it did go down to the lows, but and it happened sort of at the end of the day. But I've never seen that in all the time that I made markets. For years, I never did a XLU trade 50 cents down. So pretty interesting that happened. But yeah, so that kind of and at the low of the day. So these utilities, I think, are telling you maybe something about people's views on interest rates, because again, what happens is if interest rates, the long end of the curve, if they start to go higher, right, that means that there's people start to get out of yield replacements, right? Some hiding places where investors usually go to get yield, like utilities, big dividend stocks, right? If the bond rate actually goes up, people will substitute out of their equity yield enhancement trades, and they'll go into the bonds instead, because theoretically, the government bonds are close to free, zero risk, right? So you see that. Now, I think a lot of people were saying, okay, well, if that's going on, usually when the long end of the curve like that starts to, when the yield curve steepens, people go into financials. Well, the financials are getting creamed. They're down again today, and I think that's because these things don't operate in a vacuum. It's not just interest rates, right? Like if we were in a very simple environment, not complicated, then I would say, oh yeah, probably, banks should be up on a day like this. But banks have a number of issues going on. I think they're more worried about, all the loans that they have on the books and whether or not they're going to get money back for the loans and so forth. So, there's a whole set of issues, and banks are not just going to move on interest rates, I think, anyway, right now. But again, you look at this chart and what's going on with the banks. Now, do I think the banks need to go up for like certain areas of the market to go up? No. But I also don't think it gets dangerous if these things start to take out the lows. And if you look at these airlines, they're all still hanging around the lows. So again, I wanted to go through a little bit more detail. My thoughts on earnings, a couple names. but I wanted to kind of give you my thoughts about why I'm starting to feel that, hey, we've had a nice little rally here at the beginning of the week, but please, in my opinion, I'm not getting greedy here. Again, I can't tell you what to do. I'm not giving any advice or anything like that, but please, please think about, how greedy you want to be here. So Peloton, I wanted to just talk about this name really quick. I bought some shares. Here's the thing with this name, right? It's up. It's moved decently, right? If we look at the daily chart, it's now going to be it's around $40. But keep in mind what is going on with this, right? So number one, look at the short interest on Peloton. Right? This is important. This is an important concept. Right? If there's a big short interest, what happens is a short squeeze can happen where the shorts are forced to cover, and that will add more buying. So we see that in sometimes with newer names, which I think Peloton still is. But I think this thing goes higher. I think people are going to be, I know that the Peloton itself is expensive, but you know, I used to go to Soul Cycle, and I could tell you, because I've worked in New York for a long time. And first of all, I have nothing against Soul Cycle. Their classes are great. They're very difficult. If you've never done a Soul Cycle class and you've made fun of it, it's hard. So, but are people going to return right away? I mean, the Soul Cycle studio, you're in right next to one another. Everybody's sweating. It's hot as hell in there. Are people going to return to that? When are they going to return to that? Versus just investing in your own bike where you can do the same classes online. I think that this has got a lot of runway to it. So I normally don't tell you that on these videos, but so I went ahead and bought some at what did I do in the aftermarket? Not anything that big, but this will be more for like a trade that I'm thinking of. But again, a lot of traders played this. This was one of our watch list names coming into the week, and it performed really well. So again, a couple other trades. Again, I'm just not being super greedy. I got $5 from this FFIV. I tried trading Square actually for run into earnings. It didn't really work. Yeah. TLT, I actually tried to buy the dip in it. I got stopped out of it. I've talked about stops before, getting stopped out of some things, no big deal. But yeah, had some nice trades today. All right, guys. So that's it for today's video. Again, I always like to show all the trades that we do, just so that you can see real trades rather than people talking fictitiously on Twitter. All right, guys. Have a great night and see you tomorrow.